This is the Nedgroup Investments podcast, where we explore a variety of views and insights that investors care about.
Hello, I'm Trevor Garvin from Nedgroup Investments Multi-Manager. This installment of your market and economic wrap is titled Finance Minister's Hands Are Tied for Medium-Term Budget Policy Statement. The Rand was marginally weaker this past week as it continued to hover around 17.60 Rand to the dollar, with the main drag coming from US dollar strength as investors await the Federal Reserve's next policy decision. Adding to the pressure is the ongoing uncertainty about the effect of China's economic stimulus after growth fell in China in Q3. The Rand is currently trading at 17.71 Rand to the dollar. The dollar is at a 3-month high against major currencies on expectations that the Fed would ease by a smaller 25 basis points in its November meeting. On Thursday last week, the JSE All Share Index was at its highest level since September, ending a 3-month streak of declines. The boost came from precious metals, miners, and financials. US stocks were up at the end of last week, with the S&P 500 and the technology-dominated Nasdaq closing marginally higher, although the gains failed to erode the week's previous losses. In Europe, stocks ended on a positive note, with the French CAC gaining after carmaker Renault reported a 5% jump in profits. The Japanese Nikkei dropped by more than 2.2%, with all eyes on this weekend's political elections. Brent crude oil prices closed the week at $75 per barrel, fueled by market concerns over supply disruptions and ongoing uncertainties around the Middle East despite many diplomatic efforts. Gold prices were steady, while platinum gained 1%. Oil prices fell around 5% yesterday to around $70 after Israel's strike on Iran this past weekend did not target oil supply depots. South African headline consumer inflation decelerated to 3.8% in September from 4.4% in August. We expect inflation to remain contained in the coming months. Most downward pressure emanates from lower transport costs resulting from lower fuel prices. The Rand has been resilient and will probably remain stable in the short term. The upside on inflation will mainly emanate from food as the impact of drier weather conditions earlier in the year filters through to certain food prices. We forecast inflation to end the year at around 4% and an average of 4.6% over 2024. The risks to our forecast are tilted to the upside due to the price of Brent crude oil, which does remain vulnerable to tensions in the Middle East. This week, without doubt, the focus will be on the 2024 medium-term budget statement, to be tabled on Wednesday by our Minister of Finance. We project slightly higher aggregate revenue growth for financial year 2024-25, as gross tax revenue is lifted by a healthy increase in both personal taxes and a marginal gain in corporate taxes. However, subdued spending by the consumer will contain value-added tax collections, or VAT, with a slight shortfall likely for the financial year. Overall, we estimate gross tax revenue to be 2 billion Rand higher than National Treasury's February 2024 estimate, lifting total revenue growth to 6.1% for the past year compared to last. The public sector wage bill will re-emerge as a significant drag on spending, as the government and public unions are in talks for financial year 2025-26 wage settlements. The unions have tabled a double-digit figure, well above the 4.6% rise in the February 2024 budget numbers. Debt service costs will likely rise at a slightly higher rate than National Treasury forecasts. Overall, we expect expenditure growth at 4.2% in financial year 24-25 versus the National Treasury's projected 4.4%. We estimate the consolidated budget deficit at 4.4% of GDP, slightly lower than the 4.5% projected in the 2024 national budget. This can also be seen by the positive statements coming out of the International Monetary Fund recently, as well as the global ratings agencies. The Treasury could also announce changes to the inflation targeting framework by lowering the midpoint of the inflation target band to 3% from the current 4.5%. We shall wait to see on this front. That brings us to an end of today's market report. With strong market returns over the past 12 months lifting investors' spirits, let's hope that the budget delivery is able to continue to support the existing positive investor sentiment. Till next time, with thanks, Trevor.
Nedgroup Collective Investments is an authorised collective investments scheme manager in terms of the Collective Investments Schemes Control Act. Nedgroup Investments does not provide advice on financial products and will only give you factual information. For further details on our funds and to view our terms and conditions, please visit nedgroupinvestments.co.za. Nedgroup Investments. See money differently.